Part 5, Investing in Mutual Funds, Case Study. Welcome to our YouTube channel. This is the last part of the saving and investing tutorial. I hope you found this tutorial helpful. Hit the like button and let us start. In this section, we will explore practical examples of investing in mutual funds, and analyze an investment portfolio to understand how to maximize returns and minimize risks. Let's assume you want to build a balanced investment portfolio consisting of mutual funds, and you have a certain amount to invest. The first step is to define your financial and investment goals. Do you want to achieve long-term capital growth? Are you aiming for a steady income from your investments? Or perhaps you want to save for a specific goal, such as retirement or buying a house. After defining your goals, you need to determine the risks you are willing to take. Mutual funds come with different risks depending on the type of fund and the assets they invest in. There may be funds that invest in stocks and emerging markets, carrying high risks, while others invest in bonds and low-risk assets. Once you have identified your risk tolerance, you can start analyzing the investment portfolio. Look for mutual funds that align with your goals and the level of risk you are willing to bear. Study the historical performance of the funds and evaluate their long-term returns. Check the asset allocation for each fund and see if it matches your preferred asset distribution. When selecting mutual funds, you can execute the investment by opening an account with the fund management company. You will need to fill out a subscription form and transfer the funds to the designated account. After that, you become a shareholder in the fund, and your money will be invested in the specified assets according to the fund's strategy. In terms of benefits, mutual funds offer a range of important advantages. Firstly, they allow individual investors to benefit from portfolio diversification and risk reduction by investing in a variety of assets. Secondly, they provide access to professional management teams that handle the fund's assets and make investment decisions based on comprehensive market analysis and expertise. Thirdly, they offer the ability to invest in the market with small amounts, as individual investors can start investing even with small sums and increase their investments over time. Financially, mutual funds can achieve good returns in the long run. This return is achieved through the growth of the fund's held assets and the distribution of profits and dividends generated by the fund's investments. Additionally, mutual funds may offer some financial incentives, such as tax deductions on long-term financial returns in the funds. In conclusion, investing in mutual funds presents a great opportunity to build a balanced investment portfolio and achieve your personal financial goals. Conduct the necessary research and analysis to identify the right funds for you, and consult a financial advisor if needed. Make sure to define your financial goals carefully and determine an appropriate level of risk before investing. And remember, investing involves risks, and diversifying your investment portfolio is preferred to achieve the best long-term results.